So we dropped a video earlier today talking about Walmart and going over their earnings, talking about guidance and what that could mean for the economy as a whole. Definitely go check out that video. I put that out earlier. And today, what I want to do is go over Home Depot. So Home Depot had earnings today. They did top estimates. As of right now, Home Depot is actually up 1.69%. I want to go through the details of the actual earnings report and ultimately if I think Home Depot is a buy today. Hit the like button, subscribe, check out our Discord community, guys. The link is in the description. We're nearly 10,000 members of investors and traders, all like-minded individuals who come together to make each other better, to give each other ideas, and also to just help each other become better. You guys will get access to free courses, free live streams, free seminars, free webinars, free trades, and my free investments. All of that is over there completely for free. Use the link in the description. Now, taking a look at Home Depot, like we said, the home improvement retailer reported third quarter earnings of $4.24 per share, which did top analyst projections. Revenue came in at $38.9 billion, up 5.6 from a year earlier, topping estimates of $38 billion. Same-store sales rose 4.3% ahead of the 3.1%, and U.S. same stores rose 4.5%. So very, very good for Home Depot as far as their earnings are considered. It's very good for them. And nothing crazy, but to see growth beating estimates and to see growth in general is really, really good for Home Depot in general. Like if you look at a lot of companies, the fact that they could be growing this year is really solid, especially when we saw for the past 2 years with the 19 situation happening. Home Depot grew like crazy, which is very good, but to see them to continue to grow is very nice. And looking at the income statement, like I said, from, let's just look pre-19, not 2019, but what we're talking about, I don't want to get demonetized, but looking at 2017, they had revenue of 99.9 billion. 2018, 105 billion, so they only rose 5 billion. 2019, 109 or 110 billion, so they only rose 5 billion, which means they would have been in 2022 projected to have about 117 billion. Instead, they did 125 billion, followed by 147 billion in 2021, and then 2022, 157 billion. So they're still growing aggressively, not as aggressive as 2020 to 2021, but still aggressive, which is a very good sign. How that going to continue in the next couple of years, we'll see what happens. But as of right now, very good sign. Also, too, very nice is that gross profit is growing with that. It was very good. So looking at this company and looking at some core metrics, market cap 319 billion, trailing 12 months 157 billion, net income 16 billion. We already went over some of this. Trading right now at a PE of 18.8 and a 5-year PE of 23.8. So even looking at the past 5 years, our average PE as of right now is very low. Looking at the price to sales, 2.3. Looking at the dividend, also pays a 2.4% dividend. So if you're somebody who's a dividend investor, this is solid, right? This is very, very, very solid. Now let's take a look at our 8 pillars, which everything money uses, but to be quite honest, I don't care about all 8 of them. The one I really look for is a PE of at least under 25 for something like this. They have 22.5, 23.8 5-year PE. I'll take that. I don't really care. 5-year return on invested cash is 9%. We're at 23%, so that's good. Revenue growth 5-year is good. Net income is 5-year is good. Looking at analyst estimates, you can see EPS estimate for March of 2022, 15.9, and then taking a look at the stock analyzer tool, which is usually what I use this app for. Let's just run some numbers. So I'm going to use some very conservative numbers. As you guys know, if you watch the channel a lot, anytime I'm analyzing any company or any future projections, I try to use a very conservative number. So past 10 years, revenue growth has been 7.9%. Past 5 years, it's been 10.5. Past 1 year has been 6.5. So we're going to say conservative number would be 3%. And let's just look at a mid number of about 6%. And let's look at the high end of 9%. If we look at profit margins, past 10 years, everything's been hovering around 10%. So like I said, conservative, let's do 5%. Mid, let's do 8%. And then let's go 12% high. Same situation for free cash flow. Let's do 5%. Let's do 8%, and let's do 12%. PE ratio, let's do 10, 15, and 20. 10, 15, 20, and then we're looking for at least a 15% return every year, or it's not even worth investing. And you can see here as of right now, if you trust the high side of things, which to be quite honest, like to me, the high side, it's really not that crazy. Like I think they can pretty easily do 9%. I think they can bring profit margins up to 12%. Free cash flow, 12% is pretty tough. PE, I think that can get a little bit higher than 2025. So looking at this, if you were trying to get an insane deal on Home Depot, like a great deal, you would be looking at Home Depot at 162 bucks. If you don't care about having a great deal and you think that these high projections are pretty easy, you're looking to buy Home Depot under 350 bucks. And looking at Home Depot, it's at $312. So for me personally, I would not be buying Home Depot. I like their numbers. I like what the company's doing. I think Home Depot is a phenomenal investment long term. But like I say all the time on this channel, I'm not looking just to invest in great companies. I'm looking to invest in companies that are cheap. Home Depot is not cheap. If Home Depot got down to 240, 225, 200, 175, I'd buy the living crap out of it. Is that going to happen? Probably not. But until then, we have tons of other potential investments that we can make. Guys, let me know what you think. Let me know if you're a Home Depot shareholder. Let me know what you plan. And if not, let me know what price you're looking to get in at. As always, guys, thanks for all your support. And I'll see you guys tomorrow. Peace.